You bought Bitcoin, you hold Bitcoin, you believe in Bitcoin. But what happens when rising prices means companies start locking and hoarding Bitcoin forever? What happens when governments start treating it like a strategic reserve instead of a speculative asset? Doesn't that make the world more unequal? Or does it finally give you a money that levels the playing field? I'm Oceans. This is Beyond Bitcoin. Let's dive in. Well, not actually going to dive into this dirty, mucky duck water. Come on.
Federal Reserve and their mismanagement of interest rates in the economy has caused, it's gargantuan. It's absolutely gargantuan. And so, again, I wrote the book to tell the story, to explain to people that this is the core problem. This isn't a blue thing or a red thing. It's not a liberal thing or a conservative thing. This is a underlying monetary thing that is causing enormous unnecessary pain for millions and millions of Americans. It's been going on for a long time. And unless we diagnose the core problem and solve it, it's going to continue to go on. Now, that's all the bad news.
Let's be honest about what's really driving this question. It's philosophy. No. It's fairness. Nope. It's price. Ding, ding, ding. Because every time Bitcoin's price moves higher, it does two things at once. It validates the people that are holding it, and it raises the barrier for the people who aren't. That's the tension that nobody wants to sit with. When Bitcoin was cheap, it was easy to ignore. But when Bitcoin starts holding value and repricing entire balance sheets, it forces a reckoning. Bitcoin doesn't promise equality, it forces a choice. And whether that choice closes the wealth gap or blows it wide open depends entirely on what you will do next.
So the monetary system is broken primarily because we've kind of got a two-tier monetary system, and the average person doesn't know how to make inflation work for them. When the Fed went to 0% interest rate policies, actually when it went to 1% interest rate after the bursting of the dot-com bubble, and then it went to 0% interest rate policies after the 2008 crisis, what they effectively did was they allowed wealthy people and financial players to borrow for zero cost and invest in assets that would go up in value. And the average person doesn't have that ability. And this is what we all refer to as the cantillionaire effect. And so the average person, when they want to borrow money, they've got to go to a credit card company and pay 25%, which is egregious in and of itself. And that's an entirely different story. But, all those laws got changed years ago. There used to be usury laws in the United States. You couldn't charge that kind of interest, but, the mob would blush. But the point is that this two-tier monetary system where the insiders and the people close to the monetary printer get an advantage over the rest of us allows them to amass great wealth while the rest of us suffer the effects of the inflation that we really don't have a way to protect ourselves from.
Rising price doesn't just attract retail, it attracts serious capital. Companies don't start buying Bitcoin because they like the memes. Maybe. They buy it when the price proves it can survive cycles, volatility, regulation, and panic. And once price turns Bitcoin from a trade into a treasury asset, the game changes. Because now the question isn't, will Bitcoin go up? The question becomes, who gets to own it before it goes up again? And that's where the wealth gap conversation actually begins.
I could see that it was a very good area, macro-wise, to short the housing stocks and the finance companies that had gotten very levered up into the housing business. And so, in 2007, a couple of Bear Stearns hedge funds blew up. And I realized, okay, this, it's coming to an end here. And so I put those shorts on. And then in March of 2008, Bear Stearns went under and Morgan Stanley bought it out with a $20 billion subsidy from the government. But, I was still short and it was all starting to work. And, I was short Lehman and AMBAC and Fannie Mae and MBIA, just a bunch of companies. And the bottom line, it got worse. Over the summer, IndyMac failed. And then in the fall, Fannie and Freddie fell into, or August, Fannie and Freddie fell into receivership. And then September of 2008, it really got intense. It was like, the guns were, everything was just blowing up left and right. It was very clear that most of Wall Street was going to go bankrupt, as Lehman did. And in the middle of that, so I had these shorts on and I was up about 50%. This is the fund I managed, and it was a lot of money. It's my money and my investors' money I was responsible for. And so it was working for me. And on, I think it was September 21 or 2, I don't know, you can Google it and find it. But in the middle of September, mid to late September, the SEC came out and said, hey, you know what? If you're short financial stocks, that's illegal. You got to cover your shorts. and they just put out a blanket. So again, they changed the rules. They didn't want financial stocks to go down anymore. They were trying to protect the insiders. They were trying to protect the banks. And everything I held rallied 50% in a week. And so I was forced to cover out of my winning positions, and gave back all my profits for that year. And had I been able to hold them to the end of the year, I probably would have gone up 100, 150% for the year. But they basically changed the rules in the middle of the game.
Here's another hard truth. Bitcoin wants to be hoarded. That's not moral judgment. It's just the way it's designed.
The idea of just wanting your money to retain value, not even increase in value, just retain your purchasing power, that's an extreme position to take is wild.
Yes. I know it's like, how dare you want to keep your own money? That's so selfish of you. It's anti-social. It's sociopathic. Your money belongs to us.
It's probably racist somehow.
It's probably racist, definitely sexist and misogynist. I mean, you can see how it's just built on the idea that your money is not yours. Your money belongs to society, and the government decides how it allocates it to society. And we, in our infinite wisdom, have decided that it is more safe. It is safer for you to keep your money in the Fiat Ponzi scheme, so that a lot of people are moving it around back and forth, and we get a lot more GDP, which, is just basically cover for we're going to devalue your wealth and take it.
Yeah.
Fiat forces spending through inflation. Bitcoin rewards patience through scarcity. So what happens? Individuals hold, companies hold, and eventually nations hold. And when entities with massive capital decide Bitcoin is the best long-term asset on Earth, they don't trade it. They lock it away. Treasury reserve, strategic collateral, balance sheet backbone. Why do you think you're trying to accumulate as much Bitcoin as possible? This is where the critics scream, see, Bitcoin is just for the rich. But that critic misses something important. The problem isn't that rich entities can hoard Bitcoin. The problem is that every other system prevents everyone else from even trying. Bitcoin doesn't create hoarders, it removes gatekeepers, and that distinction matters.
Here's what the data shows. So let's start with the scary statistic that everyone quotes. BitInfo Charts shows that 2% of Bitcoin addresses hold 95% of all Bitcoin. And honestly, when I first saw this data, I thought the critics might be right. I mean, this looks absolutely terrible. But here's what's weird. If Bitcoin is so concentrated, why are billionaires and central banks fighting so hard against it? If they already control 95%, why bother? And here's another question. If 2% really control Bitcoin, why haven't they changed the rules yet? Why not increase 21 million market cap? Why not change the code to benefit themselves? We'll come back to that, but it turns out that 95% number is measuring the wrong thing entirely. It's like counting parking spaces to figure out car ownership. One person can use multiple spaces, especially that guy who uses the Range Rover who parks across 2 spots. Yeah, looking at you, Lewis. And some spaces hold multiple people's cars through car sharing. You wouldn't look at a car park and go, well, 500 spaces mean 500 people own cars here. One Bitcoin address doesn't equal one person. I personally have more than one address and I'm nobody. My mum follows this channel and even she doesn't watch all the videos. But more importantly, one address can represent millions of people. Those massive Bitcoin addresses everyone panics about, they're usually exchanges like Binance or Coinbase holding Bitcoin for their millions of customers.
Let's pause here for a moment. If you're serious about Bitcoin sovereignty, remember this. Self-custody doesn't stop at your wallet. That's where sat123.com comes in. They help people stay connected and secure even when traditional networks fail. With reliable satellite communication and rugged gear that keeps you reachable and protected anywhere on Earth. Whether you're off-grid, traveling through areas with limited connectivity, or simply value independence from centralized infrastructure, having robust communication tools isn't just convenience, it's part of sovereignty in action. For Bitcoiners, that's a natural extension of self-custody, because owning your money is one thing, but staying connected to the world on your own terms is another layer of independence entirely. Go to sat123.com and put the promo code SIMPLY for 15% off your purchase. Stay sovereign. Stay connected with sat123.com. Now let's flip this argument about does Bitcoin increase the wealth gap? Because this is where most critics completely fall apart. Bitcoin is divisible down to 100 million units. A Satoshi. A Satoshi isn't a fraction of Bitcoin. A Satoshi is Bitcoin. Same rules apply, the same scarcity, the same resistance to debasement. That matters because Wealth gaps aren't created by rich people saving. They're created by poor people being unable to save without losing value, which is in the current fiat system. The fiat system destroys small savings systematically. Bitcoin preserves them by design.
What I think money is how we save our time and our energy. And when you frame it in that perspective, then when you apply that to inflation, interest rates, taxation, you start to realize that these things are draining your energy, right? We spend so much time, an unfortunate amount of time in our lives here on Earth, trying to acquire this money by expending our time, our energy, our resources, giving up valuable time with our family, giving up pursuing dreams or passions, things that might improve us as a human being, right? But we're instead out here trying to gather this money because we're trying to store that effort and energy into something, into some like a battery, so that we can get to this point where then we can pursue our passions, our dreams, spend time with our family, retire, enjoy life here in this incredible experience, right? But if while you're doing that, other entities are sucking the energy out of that battery without your permission, without your knowledge, with it, that begins to show you how valuable I think Bitcoin is compared to storing that energy in something like fiat currency. So I like to think of it in those terms, right? And to me, it's sort of like unfortunate that we have to play this game. But if we have to play this game, if that's where, at least where we are right now, as a race, as a species, then we have to do everything we can to store that in a battery that's going to get bigger over time.
If anyone on Earth can store just $5 of their own labor and know that it won't be diluted by policy decisions they had no vote in, that alone changes the trajectory of their life. Not overnight, but over time. Bitcoin doesn't make everyone rich. It makes saving possible again. And that's a radically different claim. Here is the distinction you should sit with. Bitcoin doesn't guarantee equal outcomes. It guarantees equal access. No credit score, no minimum balance, no permission. A street vendor can use it. A migrant worker can use it. A teenager with an iPhone can use it. The same network with the same rules. That has never existed in monetary history. And once you understand that, the wealth gap question changes. The real question is, does Bitcoin make inequality permanent? And for the first time in history, the answer might be no.
But I think another factor to consider is what was the source of money creation? I mean, of wealth concentration, right? So in that era, a lot of the wealth concentration went to these big industrialists that were actually solving problems for people. And sure, a lot of them had like unethical aspects to their business and kind of aggression there. But in general, the quality of life for a person was materially increasing from decade to decade, right? So if you looked at people in the 1920s compared to the 1880s, for example, and says, are you better off than your parents were? Normally the answer would be yes, because you had things like electrification and internal combustion engines and railways and all the things that we take for granted today. That was a very strong period of growth. And those that were at the top of the leading companies, of course, acquired a lot of wealth in the process. But I think the main variable is not wealth concentration per se that's the problem. It's whether it's unfair wealth concentration, like there is cronyism kind of like siphoning money in one direction or another direction, or another way of looking at it is the average person, is their life getting better or worse over time? And more specifically, do their kids have a better life than their parents did? And so right now we're in an environment where by many metrics, kids are no longer having a better quality of life than their parents, by health outcomes, by income outcomes, all sorts of different variables you can look at that. And that wasn't really the case back then. So I think that is a more concerning aspect to be aware of.
Bitcoin is a network, but most people still experience it alone. That's why you should download ClubOrange, formerly the Orange Pill app. It's a Bitcoin-only social network built to help you find real Bitcoiners near you, discover events, and connect with merchants and communities that actually live this stuff. Go to ClubOrange today and download the app, and you can DM me at Oceans. I read all the messages there, and I look forward to hearing from you. Now back to the show. Like I said, Bitcoin doesn't promise equality. And anyone who tells you it does is probably lying to you. It promises choice. Choice to save without dilution. Choice to opt out without permission. Choice to convert time into capital, slowly, honestly, and consistently. Early adopters will benefit more. That's unavoidable. But late adopters won't be locked out. They'll just have to be patient. And in a world built on debt, leverage, and shortcuts, patience might be the most revolutionary thing of all.
Price of money, in my opinion, is the most important price in the world because it determines capital allocation. And the proper allocation of capital is what determines human well-being. And so if we want to have higher standard of living for everybody in the world, we have to allocate capital properly. And we can't do that when we've got a Federal Reserve that decides the interest rates are either, 20% or 10% or 0%. I mean, that's, we're on the seesaw of just crazy rate moves in both directions. And that shouldn't happen. If we had sound money, the interest rates would stabilize at a level that balances investment with savings. And that's the key. The interest rate should be the price of savings as against what's needed for investment. And then capital allocators can make the correct decision as to where things should go, where the money should be invested to increase productivity and output for everybody.
Bitcoin doesn't decide the outcome of the wealth gap. You do. Whether it narrows the gap or exposes it faster than ever depends on whether people understand what they're holding and what they're choosing to opt into. That's beyond Bitcoin. Thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below, or you can subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, don't forget to hit that notification bell. I'm Oceans. This is Beyond Bitcoin. Until next time.